Pre-September 2023 mock exam, question number 31. There are 9 marks asking us to do some preparation of a profit statement. I told you last night, I would take time to identify the verbs, because the whole essence of the exam is that I should do what I'm instructed to do. If I don't do what I'm asked to do, I do something else, I don't score marks. Under the current transfer pricing system, prepare a profit statement showing the profit for each division and for Hottcule Co as a whole. Your sales and cost figures should be split into external sales and interdivisional sales as appropriate. This is for 9 plenty marks. Hottcule Co manufactures products relating to temperature control in buildings. It has got 2 divisions, air and power. The air division specializes in AC systems. AC systems use a motto that the air division is required to obtain from the power division. So I'll see power supplying motors to air. This is not the first time a question like this has appeared. The format is to bring out the sales. Financial accountants will just say sales. From a performance management perspective, talking about transfer prices, we want to talk about internal sales. That's the amount of sales earned by the transferor for selling to the transferee, and then amount of external sales. Financial accountants will classify costs as cost of sales, operating expenses, income tax, finance costs. Here, we are not concerned about all those classifications. We are concerned about, number 1, the transferee incurs costs to bring in the goods from the transferor. So that's a transfer in cost. Then each division has got its own variable costs and has got its own fixed costs. So if you get a question like this, do the classification of the cost in this manner. Then you get your profit. I will bring the transferor first. In this case, they say air is required to obtain power from the power division. So power is a transferor. And then I'll bring the transferee, air. I love to arrange my work like this every time, even if the examiner doesn't do his own like that. Okay. Reason I'm doing this in spreadsheet, Microsoft Excel, you know, because I want you to be able to see the formula when I send the sheets to you. The air division specializes in air conditioning systems. Its systems is a motto that the air division is required to obtain from the power division. The power division is required to give priority to meeting the demand by the air division. But once it has done that, it can sell its remaining production of motors extremely. This is the transfer pricing system in operation. Currently, if the transferee doesn't have enough, the transferor cannot sell its motors outside. That's the policy. The following data is available. The motor that air gets from power, they buy it at 100. And this confirmed. Selling price per motor to air division, 100. And you have been told that is based on full cost. Can you prove the full cost? It's not necessary to prove it in the exam. But look at air. Can you prove that the full cost of making a motor is $100? Take a look at air. They make a motor by buying material 70, by spending, motor from power division.
45.
I should be talking to you about power, right? Power transfers to air. So let me begin down there. Power buys materials at 45, pays labor at 40, incurs distribution costs, but these distribution costs are spent only when we are doing external sales. But so transferring to air, we don't spend that money. So their marginal cost is 85. Yeah, I think I heard someone say 85, 85. But they also have annual fixed overhead, 3,750, spread over maximum capacity. So if you spend, plus fixed cost per motor, 3,750,000 spread over 250,000 motors. It's 15. So 85 plus 15 is 100. So right now, power spends $100 making a motor, and they transfer to air at the same 100. This is called full cost transfer pricing. Disadvantage: power is not making profit on those motors, so will not be happy to make them for air division. Disadvantage: including the fixed cost can distort performance measurement because the fixed cost may not be relevant. In that case, they are general fixed costs. So including them distorts performance. So rather than including fixed costs, they should have been using, for example, marginal cost plus profit. Anyway, that's not what is asked, but I'm just doing the extension of the argument. So you see the full picture of transfer pricing. Power can produce 250,000 motors, but the external market wants 230,000. Under the current transfer pricing system, the power division is required to give priority to meeting the demand by the air division. But once it has done that, it can sell its remaining production of motors externally. So let me have power transferring all the 120,000 that air needs, transfer to them at $100. And then if you can produce 250,000 and you are selling 120,000 to air, the remaining, I guess, 130,000, you are selling to the external market, selling price per motor to external customers at 140. You are making more money for that one, but you have been restricted by the transfer pricing policy to sell as many as Air wants at 100. When, of course, people are waiting outside to buy at 140, but that's the transfer pricing system. So total sales by transferor is $3,020,000. $30,200,000, sorry, 30.2 million. Now the transferee Air sells all its air conditions, the 120,000 air conditions, to the external market at a price of 400. They don't sell anything to power, so their internal sales is zero. Good news is that of the 9 marks available, at this point, you have earned some anyway. Do easy things first. The annual fixed overheads of Air, 6.2. Annual fixed overheads of power, 3,750,000. Put them down and score some marks. That's no work. Power's own fixed cost, 3,750,000. Air's own fixed cost, 6.2 million. If power earns 12 million for selling internally, that 12 million becomes transfer in cost for Air. One man's meat is another man's poison. How much I sell to you, my brother, becomes your cost, my brother's cost. Same thing there. What am I doing at this point? I'm showing you an exam approach. People go to the exams. Not until they finish the top, they don't get down. Meanwhile, some easy marks will always be at the down to pick up. What's the variable cost of the transferor? Power. Materials, 45. Labor, 40. So see, these are their variable costs. They spend 45 plus 40. That makes it 85 plus 5. So they spend, is that $90? So let me do this. Let me rather do, they spend $90 selling to external customers. So times, remember there are 250,000 capacity, they were selling 120,000 to Air. So they were left with only 130,000. So times 130,000. That's the variable cost selling externally. But they also incur variable cost of 45 for materials, 40 for labor. So that's 85. Selling to their brother. That's Air Division, where they sell 120,000 to them. Right. Let me go to Air. Air spends, apart from motor from Power Division, which constituted a $12 million transfer in cost, they also spend on material 70, labor, what's that? Labor 80. So they spend 70 plus 80. That's 150. Sorry, 70 plus 80, yeah, 150, producing each of the 120,000 air conditions. Friends, this is how we have built up total costs for the transferor and total costs for the transferee. So total sales minus total costs gives me profit. All right. Exam technique, always go back to read the requirement again, even if you think you are done, even if you believe you are done. Under the current transfer pricing system, prepare a profit statement showing the profit for each division and for Hottcule Co as a whole. Right now, we've not done for Hottcule. So for the entire company, I'm going to have now, please understand that internal sales cancels out or is canceled out by transferring costs. So from the company perspective, don't count the $12 million. Somebody's in the chat box. Hi, Senor, could you please split the own variable cost for power for easy understanding? Okay. So own variable cost for power. The units sold to external customers. The units sold internally to air. External to air, they sell 120,000 units. To power, they sell the remaining 130,000 of their capacity. Sorry, to external customer, yeah, 130,000. That making 250. If we look in the question, power, cost per unit, that's the variable cost. Materials 45, labor 40, that's 85. But when selling to external customers, they spend $5 on distribution cost. But when selling internally, they don't spend that. So 45 plus 40 is 85. 85 plus 5 is 90. So 45, 45. Selling to external customers, they spend 45 plus 40 plus 5. Did I do something right? 45 plus 40 plus 5. Selling to air, they don't spend the 5. They spend 45 plus 40. So in all, selling to external customers, 30 that amount, and then also that amount. So the total own variable cost is this plus that. 2 million, sorry, 21 million, 21.9 million, I must say. So that's how the 21.9 was done. So that reminds me, some of these calculations that are long, the advice would be to do them like I've done right now, the breakdown, and then link the cells. Because the more you do things in one cell, the more likelihood there is of making an error. Okay, so that's done, Anna. I hope you are okay with that.
So can you do same for 18 million?
Can I do same for which one?
The 18 million.
The 18 million. Yes. So let me copy this and say I'm doing the own variable cost for air division. As for the air division, they are only selling to external customers. They are selling how many air conditioning units? 120,000. The variable cost per unit of making an AC unit is, apart from the transfer in cost from power, they spend other material 70, labor 80. So they spend 70 plus 80. So therefore, their total cost is this times that. 18 million. Yeah. So when you rehearse, you find out what works best for you. And what works best for you may not be something that works best for me. So this is why you have to practice, friends. So most of the time, these calculations, do them outside like this and link the cells rather to avoid mistakes. All right. So thanks for that feedback. I was explaining that examiner reports always lament that many people forget about the fact that the transfer in cost, the internal sales of the transferor is canceled out by the transfer in cost of the transferee. So when you are talking about Hottcule, don't count that. So from Hottcule's perspective, the only sales we count is the external sales. And the only costs we count are each individual division's own variable costs, each individual division's own fixed costs. We don't count the transfer in cost. If you count it, your answer will still be correct, but you'll be penalized. This equals this plus that. So from Hottcule's perspective, total profit is only the external sales minus each individual division's own costs only. 16,350,000. Of course, if I did Power's profit plus Hottcule's profit, I'm getting the same 16,350,000. So that's 9 marks. End. Practice it. There's another question, past exam question. Bathco. 95% of that question is the same as Hottcule. I'll refer you to Bathco. Sit down, do Hottcule, do Bathco, compare the two. Just in case you have a section C question asking you to prepare profit statements for transferor and transferee side by side, and then add them up to get the company's overall profit, you should not have a problem. You're going to do that under the transfer pricing system described to you. All right. So you know the reason I did that in Microsoft Excel. Don't do it there. Do it here. So the formatting and the rest, you are aware of it before the exams. That's 9 marks. We're going to check out and come back when we return. The section B question, requirement B, also calculate. So this question, unlike last night's questions, this one is a little biased towards calculations. Calculate a change in profit if all the power division sales were made to external customers and the air division purchased all its motors externally, and assess whether this situation represents the optimal outcome for Hottcule Co. 7 marks. Let's check out and come back and answer this one together.